Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 29th of October, 2019. And we're right now at a time frame of 3:50 in the afternoon, very close to the settlement, and you're going to be right in this range in these markets. It has been, in the past half day of trade today, watching paint dry on a wall. The markets don't have too much to move on. The news today started off great and the stock markets went up on it when we first heard that the Chinese news media said that there was lots of headway being made, including intellectual property and including investments by foreign companies into the economy. Sounded extremely positive. Then an unnamed White House source said, well, even if they don't sign the deal between China and the U.S. on November 16th, 17th in Chile, that doesn't mean the deal's not going ahead and that the sides aren't talking. So you put a bonfire under one talk and then you douse it down on the other, and that's basically what we have. Tomorrow we get the FOMC meeting. Going in, if you go to the CME Fed Watch page, there's about a 94% probability that the Fed is going to cut interest rates tomorrow afternoon. We then get the press conference. So 1 o'clock's the financial statement, the monetary policy statement, 1:30 the press conference. The tightrope that Mr. Powell has to walk and not fail, and he's done a pretty good job recently, is explaining that the Fed was doing insurance cuts, and the word is that he's going to pull back and try to get the market weaned off of these to a degree and say the economy's good enough. That's fine. But remember, we get GDP, payroll numbers coming out. We got a lot of information coming forth. We know the weak area has been manufacturing, but there's been a pickup in housing, and rightly so. He'll be able to talk positives in the trade talk, but not a deal. As for Brexit, it's made movement. Today, Mr. Johnson is getting a December 12th election. Now, does he win a majority at that election? That's the next thing you got to worry about. He's got to really go out and campaign. If he gets a majority government, he's going to be able to get the kind of Brexit he wants. If he doesn't, you're back into these amendments and so on, but it certainly looks as though a Brexit is going to happen. The question is what type. British pound today didn't move on that very much. Gold market dropped today, and silver market dropped, most of the other metals up. So when we take a look at the stock index for the week so far, we are still up 15.5 points. So the market's done well. The market, from the looks of the close today, it'll be so far, remember we're only at Tuesday, an all-time high weekly close. It's only Tuesday. There's 3 more trade days to go. When we come to a daily bar chart, now I can say, well, this market down 0.5 point, doesn't look like it's going to give me the highest close. And I'm still going to point out that on an inverted head and shoulder, this could be a head, shoulder, shoulder, this formation is still intact, which is possibly very bullish, possibly, if the market holds that formation. What's the other pattern that I see? You still have higher lows, higher highs is measured by the swing line. Now, you can see these right here, but would you know where to draw them concerning that line and so on? That's what the swing line does, and it's part of the charting software package that we have, and this is unique to us. But higher lows, higher highs, you'd have to take out the 29.82 level to do damage to that. You're over the 18-day average, and tomorrow we will have this 18-day average over the 29.82 level. It'll be probably a couple of points over that, the way that it's been averaging. Where's the resistance? Upper Bollinger Band, right here at the 30.58 level. And it's been a while since you've been there. It's been mid-September, and here we are about 6 weeks later. Haven't gotten up to that number. No reason you have to get to it, but bull markets tend to go to a resistance point. When we look at momentum, I still have the embedded reading. So this market's got the swing line, trend up. Bias up because you're over the 18-day average, and the most important of the indicators to me, the slow stochastic, when it's embedded, is just locked in, not showing a sign of backing off, still puts into play the possibility of getting to the upper Bollinger Band. If you lose the embedded reading, then I'll look to wherever the 18-day average is as a possibility of getting down there. When I come to the NASDAQ embedded reading, You're over the 18-day average. You have hit, past tense, yesterday, the upper Bollinger Band, and you backed off from it today. Very normal action. The first time you come down and then you go back up to a Bollinger Band, often you back off after the first hit. Doesn't mean it can't just pop through and run again. It's done its job. It's acting as resistance. In the Dow, the market has been the overbought market. Now, if we look at the numbers, both numbers today were over 80 on the stochastic. And yesterday, not the day before. It needs tomorrow. Wouldn't you know it? You got to go through the FOMC meeting to see how it's going to finish up today. I can't tell you, but if it locks in, then you've got the NASDAQ locked in, because if this is up, you're probably up in the other indices, and you've got the S&P putting into play the upper Bollinger Band. If they fail on the other two, this probably fails, comes down, and if it falls, I wouldn't be surprised if the 100-day to the 18-day average is a likely target on the downside. You know as much as the man next to you. Nobody knows how the market reacts to the Fed until after the fact. The Russell, 3 of the 4 indices, embedded readings. You pulled down here, and then you came right back up. So I'm going to say that you've got a trend that is what? I'm going to call the trend here because of how these actions happen back here. I'll still say it's to the upside, strength between the 200-day, the 118. Now, let me tell you what's wrong on the chart. As a pure chartist, I want to see the shorter term average over the medium term over the longer term. I want them flip-flop the other way. This is still support, but that's the ideal part. You get that typically in bull markets. In the VIX, all we had was a bounce in a market that has a higher high, lower low. What's the reigning part of the market? The embedded reading. It is still bearish. This was just a bounce. You still have a target of the 1087 level. Obviously, I'm going to be waiting to see what the Fed does and how that reacts. Here, I want to come back to that. Even this little reaction to the upside hasn't done too much to break the stock market. You're still in an overall downtrend. And if you take a look when you had this crossover in the market, that made that low. We're waiting to see if we can get any further breaks in the market. Haven't done it just yet. In the T-bond market, lower highs, lower lows. The previous support at the 100-day average, right through here, you started playing, is acting as a little resistance on the way up. But you have an embedded reading. Until you lose that embedded reading, it means that the rallies in this market continue to get sold. We haven't hit a Bollinger Band in a while. If it happens, that's the number. Again, I have no idea what's going to happen with the FOMC and the reaction to it. Same thing in the 10-year note. Everything on the charts are bearish, but you do understand you get a fundamental report, and what's built into a chart quickly changes. Now, I think you understand, and if you don't, I want to make it clear. The algorithms are going to take over right at 1 o'clock when this announcement comes out. They'll react quicker than you can read the announcement. Then they'll die off as we get into the FOMC press conference. That's where Mr. Powell will explain what's going on and so forth, and you'll get reactions out of that as well. We next move to TLT, which is bearish as well. That's the popular ETF, lower highs, lower lows. If it rallies, the 100-day average could act as the resistance point. Support back at 135.49, a downside target. In the dollar index, you've spent the past few days getting what I'll call a contra trend rally. Why contra? Bias is down, but you lost the embedded reading. Do you see that right through here? That often leads to the market making a run at the 18-day average of closes. And this is what you did. I don't know that that's close enough for me to be comfortable that it's finished its run. Now, if you take out today's high, which was 97.70, and you're at 97.46.5, that would probably set off a run to wherever that 18-day average is. If this market just drops from here, supports the 100-day average, you're not trending, you're oversold, and you have downside bias, a real difficult market. You've got a flip-flop of it in the eurocurrency. It was breaking down, and this is what I call making the run for that number. If we look at the 18-day average, if I round it, it's 111.09. Today's low, 111.08. If I don't round it, it's 111.08 and a half, the 18-day average. The low is exactly what it should have done. Came in at the 18-day average, and you have an outside day up. So this market held its support, but I think the pros that were playing against the trend, that's where they came out of the market today, and I think everybody's sort of waiting to see what happens. An outside day up, if you take out today's low, does that mean we're going back to these lows? Could happen as a chartist. British pound. How do you play this? This is a difficult one. If you take a look at the momentum here, you've been with an embedded reading that the market's been breaking off of. Now, at first, the market went up, and you could see how this market started getting, and we'll come together with it. Right here, both numbers over 80, both over 80, both over 80. So you've got your embedded reading. You have an outside day to the upside, maybe. I don't know where the settlement's going to come in just yet. Going through these reports, too difficult with the Brits. In the Japanese yen, as long as you keep the embedded reading, I'm definitely in the bear camp on the market. And it just keeps gradually on these bounces. You do get them. You're up 15.5 today. But so far, they've been sold. Again, you've got to figure out what the FOMC is going to do. I can't help you there. In the Bitcoin, down 215 at 93.15. Guess what number you're going to be under? Yeah, that upper Bollinger Band. As I said yesterday, when we heard the Chinese talk that they like Bitcoin technology, I think the market interpreted that to mean they like cryptocurrencies. Now, we know that they're looking to diverse in some manner away from what's going on with the dollar being the world power. And I think the market got carried away, and today you're seeing a little reality come in on that. When we take a look at Brent versus WTI crude, the Brent is still gaining on the U.S. Crude. As you see this is the Dees Brent, pulled back today to the 100-day average. It's been fighting at that for support, held it. The market is now got both numbers over 80 today. Yesterday, both over 80, and the day before. That's called an embedded reading. And until the red line closes under 80, I am expecting on pullbacks the market to be well supported. And the WTI battleground is right here at the 18-day average. And today, the market at 55.54 is basically right on that 100-day average. So what do you do with that? And again, if you look at both numbers, they're over 80 here. They yesterday were over 80, and the day before they were over 80. So both have embedded readings. I'd say tomorrow's EIA numbers are going to set the tone for this market in a large way. Gasoline market, you're fighting a big resistance point at the upper Bollinger Band. The market was up today 70 points. If you look at the high, you got to 165.72. The Bollinger Band's 165.45. And again, you get sold off from there 130 points. So I think the pros are looking at that. But on the pullbacks, I expect that they're buyers of this. And then we get to the cold spell. And I told you, the first cold spell you get in, forget it. Got to be a weatherman to catch this. And away it went. And that's what you're getting out of that, because it is cold. Snow. This is the first winter spell coming across the country. You're up another 8, but you're over the upper Bollinger Band. So how long you can stay over, it's anybody's guess. What I expect is this top band's going to be pulled along, and we're going to have a wider trading range with a bullish bias, and the market just entered overbought territory on the close today. We talk about this in great length in our multiple, and I use multiple daily reports. So whether you trade in the currency markets, want some education, you're trading in the energies, the metals, the stock indices, we're writing during the day and giving you ideas as to what we're seeing. You get breaking news on Brexit, it's coming out. At the end of the day, you're getting complete reports coming out. You can be in your email. You can go view them in our multiple software projects. In other words, when I say projects, I mean our handheld apps, I mean tablet apps, I mean stuff for Android, other parts for iOS systems, and of course, PCs. It's all there in the way that I think many traders want it. And when we say weather, I am not talking your neighborhood weather. We have weather maps of, be it temperature at this time of the year. You might be looking to see what's going on with the harvest, the moisture, but it's not limited to the United States. Then we're covering what's going on in South America for the traders that are looking at the grain markets. Then we can cover other parts of Europe and so on. What's demand needs all over? you're looking at this. So if you're interested in seeing what our clients see, we'd be happy to put it in your hands for a short while. All you need to do is give us a call. You can go to our website, look at free offers. You'll see the multiple offers we have. It's right there at the home page. There's a link for it. Or click up here. It'll take you right there. I'm Ira Epstein. You have yourself a great day, and I'll see you all tomorrow.